Hey real estate hackers, welcome back to another video. I'm your host Dave Hathaway. Today I am super excited to share with you that I am currently flipping a house in Washington DC that I bought sight unseen. And so I'm going to do a video series starting with this one that shares everything about this property, and it's currently under renovation right now as we speak. But we're going to start out today with the initial video walkthrough that will start playing right over here. And so you can start seeing what the house looked like, but then we're going to go over the numbers, initially when I analyzed it, what it looks like, and then we'll end up going into the renovation. And at the end, we'll go and see how the property turned out, if it was a home run or if it was the worst deal that I've ever purchased. And so what I'm looking to do in this video series is basically show you how to flip a property or how to invest in real estate. We get to do it together. We get to walk through the property together. And so you'll get all the reps investing in real estate with no risk. And so you'll get to see my mindset, how I did everything, but more importantly, you'll get to see the process, and not just with me from a desk, with me in the field, walking through the property as it progresses through the different steps. So we purchased this property about 2 weeks ago, so it's in mid-renovation. And so I thought that now would be an amazing time to start this video. And I've done a video series like this in the past when I initially started the channel for a property I purchased in Baltimore. You can check that series out right here if you want to see what it looks like. That video series was a little bit rougher. Maybe I didn't have an editor at that time. And so me just on scene, kind of riffing, but it goes through all the steps of investing and buying a hold property. Now, initially, I was thinking that, hey, I'm going to flip this property in DC, but we're going to queue up the video again for the video walkthrough so you can watch that. And I'm just going to go over all the basics so you see how we got this deal. So how I found this deal originally was I got an email from a wholesaler, and I don't normally purchase in DC, but when you're on a bunch of wholesalers list, which you should be as an investor in the areas that you want to invest in, we'll get deals in different areas. It's not just one zip code that they're going to get deals in. And so I normally look at properties in Baltimore, but I look at in other parts of Maryland, in DC, and in Virginia. And so if something just catches my eye in an area that I don't normally invest, I'll still go through the numbers sometimes. And that's what happened with this one. But that's how I found this deal, from just a wholesale email. Now, after I had found this deal, got the email, I went to analyze this property. And so we're going to go right down here to the numbers, and I analyzed it in two ways. I'm looking to do some more flips right now instead of buy and hold properties. And so when I initially looked at this one, I wanted to make sure it hit the flip box. And so you can look at the numbers. I'm pulling them right up here on my screen. But up there, it shows the property address, 3018 28th Street. It's Southeast Washington, D.C. And I projected, hey, looking at the pictures originally, I was like, oh, we can get that renovation turned around. It's not a complete gut. It's just it's probably a medium rehab. And so my ARV, which the only way you're going to figure out ARV is looking at properties that have sold within the last 6 months, within the last 12 months, ideally within the last 90 days, but sometimes you have to widen that time frame. And I found some properties that were selling for in the 400s and plus, and so I conservatively said, hey, I think we can sell this property for $395. Then you go through all the different numbers down here. My purchase price that I ended up getting it purchased for was $259. I had a rehab budget, and again, this is sight unseen, which caveat here, I do not recommend you to purchase properties sight unseen almost ever, especially if you're purchasing in these areas that are older housing stock, like 1920, 1930, 1890, any of those houses. You need to do a walkthrough, mainly because of foundation, but also just to see what renovation work's gone on. This house was built in 1997. I still don't like to do sight unseen. I couldn't get over to the property. They had one open house that I couldn't make. And so I just went off my numbers, and I trusted my numbers. I trusted my experience in looking in pictures, because I kind of know what to look for or what I'm looking for. And so I created a rehab budget about $40,000, and in the later videos in this series, you'll see if we went way under or way over, but I will tell you that it is not going to be $40,000. I'll tell you that. But from what I could see in the pictures, I said, okay, $40,000 budget. And I got hard money loan costs because my plan was to purchase this property with a hard money loan. And so that's how I had the money to purchase it. I still had to have a decent amount of money to put down on this property. And so you can see down here, down payment, hard money fees, cash needed about $64,000. And if you look all the way over here in the middle where it says resale price, this chart just shows me if I sold it for $395, what my profit would be. And so it shows there, and I have it highlighted in green because that's the target. I actually think I might be able to sell it for a little bit more, but you want to be conservative on your numbers. And you want to see like, hey, this one shows if I sell it for $395, I can make a $56,000 profit. That's awesome. But I also want to see if I can't sell it because the market's softening, what my profit's going to be. And so that's really important to be conservative. And so you can see if I sell it for $375, which is a pretty easy sale, should fly off the market, my profit is $37,000. And it's a good point here to kind of explain that you should have a minimum profit margin when you are looking at a flip. Like if you're only going to make $1,000 on a flip, that's probably one you do not want to do unless you're just looking to learn and that's all, and you want to work for free. If you want to do that, give me a call. Let's chat. I'll let you work for free. But you need to have some sort of minimum number. And so and a lot of times I think of this as how much money I have to put into the deal. And so if I only have to put $5,000 or $10,000 into this property, then maybe my profit margin can be $30,000. But if I'm having to put $64,000 into the property, that means I need a pretty good profit margin because I'm basically saying I'm investing this money and I want a return on that investment. And so that's how I personally think of it. But this was enough to say, hey, $56,000 with all the work, all the mental energy, all the stresses, that's good for me. I'll take that profit all day long. And so that was the profit I'm trying to minimize here on the screen so I can get to the next thing. All right, the next thing that I told you that I did was I analyzed it as a rental. And so I think this is important, and one thing that I think about as an investor, and we'll talk about this video walkthrough here in a minute, but I don't want to purchase a property that is going to be losing money each month if it were a rental. And that just is a conservative look. I know some people would say, hey, that's crazy. If you can make $50,000, you should do it even if the rental doesn't make money. I don't love that thought process. And I'm just telling you how I do it, what makes me feel comfortable. And so when I'm looking at these rental numbers, I'm pulling it up on my screen right here so you can see it. If you don't have this rental analyzer, guys, you can have it for free. Just go down into the video description and download it for free. So this is the rental numbers. And again, to find monthly income here, you got to look at comps. And so I looked around and conservatively I said, I can rent this puppy for $31.75. Like looking at everything else, looking at my competition. And so you can see it's got sale price, it's got the rehab there, it's got taxes, management fees, repair maintenance. And so if you go down there, if I were to purchase this property with all cash, and I was all in $313,000, almost $314,000, my return on investment will be 8.5%. And so not the worst return in the world, 8.5%. That's a little bit low for me, all cash. And so you have to look at, okay, well then if you get a DSCR loan, you get an investor loan on a rental, what do those numbers look like? And if you look over the second column, if I got a DSCR loan, that if you don't know what it is, we got videos. I'll put a link in the description for you for what a DSCR loan is. But for a DSCR loan at 6.75%, you can see what the loan payment would be up there, $1,800, and it cash flows, our property would cash flow about $728 or 11%. And if you're making 11% on your money, I'm good with that. I'm good in this environment with that, with some upside. And so that is 11% return on investment that you're making for a rental, cash on cash return, but you also have that built-in equity for the property. And if you look all the way over there to the right, that equity factor looks like the equity spread is about $81,000. And so you're getting multiple wins here. As a rent, so whenever you go to sell the property or if you refinance the property, you'll be able to pull out that equity and you're also getting cash flow. And so that was one of the big reasons that I really like this property. So let's talk about the other things that I really liked and how I dove into analyzing this property. So after I looked at the numbers and said, wow, these numbers are pretty good, or maybe while I was doing that, I'm also looking at sale comps. And so I'm going to pull up a few screenshots here for you. So if you look at Zillow itself, Zillow states that this property can be rented for about $3,621. And so I like those numbers. The Zestimate's $388,000. And so I don't totally trust Zillow. And so I do my own due diligence, but I do use that as like a data point. Like, okay, Zillow says this. Zillow's got a lot of data analytics. So, okay. And you can see that when I analyze the property, I put it at $3,175, which is a lot less than $3,600. So why would I do that? A lot of that is me just not being super familiar with the market. So I want to be very conservative. But then when I look over at rental comps, so we'll look at Zillow's rental comps, and there's a really cool thing that I like here. I like that there's not that many, and I have the filter up at the top right in this rental comp at 4 bedrooms and 2+ baths. This property is a large property. On paper, it's a 4-bedroom, I think 2 full baths and 2 half baths. And so that's what I filtered to look at my competition. I want to see what I have to compete against. And if you look here, you see rents all over the place. You see rents in the 2,000s, you see rents in the 7,000s, you see rents in the 8,000s. And so they're kind of all over the place. And so there's that. There's also that there is not that many of them for that big square area. And so I also look at Redfin. You can see Redfin, it's kind of spread out here. You got 37, 48, 62, 5,000. You got some 2,700s down there, 2,800s over here. And so you don't got a ton here. Again, we're filtering for 4 2s. 4 bedrooms, 2 bathrooms. And that's the big thing that came to me was like, oh man, I really like this because there's not that much competition. If I were to type in 2 bedrooms, 1 bathroom, you'd see that dotted map be filled. And so you got to compete with a lot more people. So I'm not competing with a lot of people with this property. And so that's one thing that I personally really, really, really like. If you look at the sales comps, again, right here, you can see on Zillow, there's ones that have sold for $420, $400, $475, $480, all in that area. And so it was also a while ago that those sold for $400 and $420 and $480. And so that's something that you do have to consider. I think those properties sold in like January and February and even into March. And so it's almost a full year from when those sold. And the market has definitely gone down a lot. And so, or softened a lot. And so I don't want to assume that I'm going to be able to sell my property exactly what other properties sold, 8 or 9 or 10 months. You really want comps that are in that 3-month range. That was why I'm so conservative on that number, that $395. I actually think I'll be able to sell it for more. I think I'll be in the $415 to $425 range. But I always come in conservative. That's how I come in. And so there's that. Let's talk about what else I really liked about this property. Other than the supply and demand, the numbers, those are 2 huge things. But the other things that I really loved about this property, it's built in 1997, so newer build. You don't have to deal with all that craziness of like a 1920 build or older. You'll see these properties in Philly. You'll see them in Baltimore. You gotta walk through those properties, like I said. So newer build, off-street parking. This is a carport on the side. Don't really see townhouses like this, but it's not like a one-off. This whole community has a bunch of them that has carports. And so you get off-street parking in a city, which is really cool. And you can fit up to 3 cars here. And so just means that the property is going to be more desirable to renters and buyers. You can fit more cars on the property. You don't have to worry about street parking. So when I'm thinking of it, I'm thinking of, more desirable. It's a 4-bedroom, 2 full bath, 2 half bath. I think we're going to make one of those half baths a full bath too. So I think it'll be a 4, 3 and a half. And so I didn't realize that we were going to be able to do that, or didn't off the purchase. I wasn't thinking about that, but seeing a 422 saw that it was, hey, there's not a big supply of this in this market. Also loving the layout of these properties. Those 3-level properties, it's got the best thing that I love is the master bedroom with master bathroom. That's very desirable to homeowners, and so it's gonna benefit me on the sale. So love that. Love the carport. We talked about parking. Also loved that it's on a big lot. So it's a duplex or an in-unit property, whatever you want to call it, because it's still attached. But the backyard's huge, which also makes it very desirable. So when we talk about like barbecues or pets, dogs, people can start visualizing, oh man, I can do a lot of stuff in this backyard. And so love that. It just continues to make it more desirable. The neighborhood's really nice. So if you pan around this neighborhood, and maybe we'll have the video editor pan down the street so you can see, this is a nice street. It's a nice block. There's actually squad cars in this neighborhood because it's right next to a police district, and people live in a few of the police officers live in these houses. One of the police officers was outside. If you didn't know, I was a former police officer for 9 years, and I actually processed some prisoners in this district that's literally like walking distance from this house. But I asked this police officer, like, how's the neighborhood? What do you think about it? And he was like, this neighborhood's amazing. There's literally no crime because it's so close to the district. Nobody would even think about doing anything over here. And in his 7 years, he said he's really seen no crime over here. So always love to hear that. You can always chat with like a police officer that's sitting there. And the last thing, I guess the last 2 things, one is rebuild cost. And when I think of this, I actually looked at another community called, I think it's called Skyland Terrace. And I saw there's a new town center called Skyland Terrace going up, and you could just see this development happening. And so it just adds that upside. And the very last is that optionality that we talked about before, that the numbers are good as a flip, but the numbers are also good as a rental. Having that optionality was just something I loved about it. And so those are the things that I liked about it. Now, we're going to pause real quick for a video sponsor, and then I'll tell you what I didn't like about it. Are you thinking about investing in real estate, or maybe you're investing in real estate already and you want to build your rental portfolio, but you're struggling a bit with renovations and rehabs? Maybe you're paying too much for repairs. Maybe you're working with bad contractors that aren't calling you back, or they're ghosting you. Maybe you're going way over timeline or over budget on your rehab. If any of this sounds like you, or you're just lacking confidence in your systems in how you renovate a property, I've created a course for you. My name is Dave Hathaway. I built a 50-unit cash flowing rental portfolio, and in doing so, I've developed some proven systems. I share how you can determine how much the rehab is going to cost, and I also share how you can find the best contractors. So if you are lacking the confidence or systems in having a great renovation every single time, this course is for you. Check it out. Go to masterrehab.com or go to the link in the video description, and I'll see you there. All right, welcome back. Let's chat about what I did not like about this property, because there was a few things. First is that I don't have a team in DC. And so having a bunch of contractors and building out a network in Baltimore does not correlate to mean like all of them are going to be able to work in DC. And so a little bit out of my comfort zone. I was feeling a little bit nervous about that. I also don't have contacts in the government here in DC. And so in Baltimore, whenever we have to remove a citation from a property, or contest a citation, or contest a water bill, or work with the housing department, we see who's a good communicator and who gets back to us. And so we build an Excel sheet of the contacts in that city of who can get things done when we need them done. And so I don't have that in DC. I mean, I have that in Baltimore, very good, but I haven't built that out in DC. Another thing that I don't like about it is I don't have built out processes. So for instance, the utility company is different than what I'm used to working with. And so I did have trouble finding insurance on this property. The insurance company that I work with wouldn't insure in DC. And so investing in a new area, you have to build out all these teams. And so it's very frustrating, but also your processes. If you do something a certain way in one area and you have that process built out, you might have to build out a different process, or the way you do it might be different. Maybe the evictions process is different in this. Maybe how you get a rental license is different. And so I was just nervous about like, oh man, I'm gonna have to create all these different processes, but if the numbers are good enough, it's worth the pain. And so I was a bit nervous on those things. And so how I actually compensated for that to give myself a little bit more confidence is I reached out to my Baltimore contractors and I said, hey, the few people that I needed, hey, are you guys going to be willing to come down to DC? Here's the address. Some of them said yes. Some of them said no. It was actually surprising. I had a contractor say, hey, I got to talk to a few of my workers just to see if they'll be willing to go in DC. I said, what do you mean? He said, all the immigration stuff, some guys might be nervous or just don't want to go into DC. I guess there's been a lot of immigration stuff. I have not really been paying attention to the immigration stuff, but it was interesting. So we had this conversation of like, hey, are the guys legal? Are they not legal? What's going on? And he goes, that conversation basically is like, no, my guys are legal. They have their work papers. They're just sometimes nervous because they hear so much stuff in the news. But it all worked out. He was like, nope, guys are coming. It's a good area. Come work. So that alleviated that nervousness. The second thing I did is I reached out to a realtor. A realtor that's relatively well known. He's big on bigger pockets. And so I reached out to Russell Brazil. Shout out to him. Just to have a phone call, just to make sure I'm understanding all the numbers right, make sure I'm not missing anything. Because a lot of times as an investor, I'm thinking, what am I missing? Why is no one else doing this? And so talked to him for a while. He shared some pretty scary stories. One of them was he had a listing that was $1 million listing, and properties were selling in that neighborhood for $1 million in DC like 6 months, 8 months before. He dropped it $250,000 and was getting no showings. And so he's like, Dave, the market's really soft. But these are guys that you just want in your corner to understand what's going on. And the big takeaway that I got is I said, hey, do you know any investors that are investing in DC? I'm having a hard time finding meetups because I figured I'd go to some meetups, can develop some contacts, just like I've spent time in Baltimore developing this network and these contacts that I can just reach out and call somebody. And so he put me in touch with a different investor that has 40 properties in DC, was able to chat with him, was actually able to pay for some coaching calls with him because I felt like that was fair. And really tap in and see, how he feels about the market, different areas in the market, how he renovates properties, what his strategies are, and similar to me. So if you're interested in doing like a coaching call, feel free to reach out to me, DaveHmedia@gmail.com. But I did a coaching call with him. And so I paid him to gain knowledge, access in the market. And we've done 2 calls, and I'll probably continue doing calls to just continue to build out my network and my knowledge in the market from somebody else that's winning. That helped lower that nervousness of investing in a new market. The last big thing that I did is that I created some filters of the markets and areas that he liked and that I like in DC. I'm a big fan of getting emails daily, so I created some filters in Zillow, and now I have daily emails, usually multiple times a day, when properties come on for rent, when properties come on for sale, and when properties sell. And so it really allows me to get really in tune with the local market that I wasn't in tune with because it's a new area. And so I'm just looking at properties every single day to understand the market really well. So that's what I did there. In addition to all that, and I teach this in my Master of the Rehab course, I create this Excel sheet for contractors. And now I'm building out that sheet in DC. I already have it for Baltimore. But again, some of the guys don't always want to drive an hour and 30 minutes in traffic. And so you have to have some other, whether it's plumbers, handyman, electrician, to build out your team to make you go quick on the renovation. And so that's, again, another plug for my Master Rehab course. But let's talk about the walkthrough. So you've seen the walkthrough throughout this video. Doing this walkthrough one last time. And so as you can see, sometimes I try to do the videos on site, but they're not really as formulaic. And I feel like it's a much bigger value if I do, a video and then I talk it through at the office. So this is the property. You can see there's a bunch of junk in this property. This was the exact condition that I bought it in. So you're walking in on that first level. It's a 3-level townhouse, and you come into, this is the bedroom number 1 on the bottom. You can see closet doors off. I hate closet doors, so that's one thing. I always try to switch them over to doors. There's the half bath on the downstairs. That's the one we'll probably convert to a shower. Didn't know that going in though. That's kind of just come about during the renovation. And this is a family room, but I am converting this. It's not even necessarily converting, just doing a closet, because there's 2 closets in that downstairs bedroom, and making this a 5th bedroom. And and you can see how big that lot is in the back. It's a big fenced in lot, goes over a ways. There's a stacked washer and dryer. It's got forced air. Again, this is a 1997 build, so it's a great property. It's got a 200 amp panel, and going up the stairs, it was handicap accessible. I did ride up and down those chairs, which was super fun. But then coming up, you can kind of see everything in this property. You can see kitchen, the dining room, and then it's got a really nice pantry. So it's got a lot of like really nice features that people are gonna want to rent or gonna want to purchase. These are the features that we like as amenities today. And so there's a half bath on this main floor, which is always nice, so people don't have to go upstairs, downstairs. You basically have a bathroom on every floor, which is really nice. Big living room, wide, lots of good light that comes into the house. And so there's the living room. And then going upstairs, got another one of those handicap things. And then we have 3 bedrooms up here, and we got 2 full bathrooms. And so one of these bedrooms is kind of small, but still classified bedroom, still got a closet. This is the small bedroom with all the Huggies and stuff. But one thing that I did mess up on is I underestimated on how much trash we were gonna take out, because I was thinking that we might be able to repaint the kitchen cabinets to save money and to save just time and effort, and could not do that. There's the half bath, hall bath. And when I'm thinking about flip as well, even though sometimes things are functional, these are things that sometimes we have to change out. And so just want you just to see all the junk that was in here. You can see the master bathroom. On one of the next videos, we're gonna start to see the demo, and we'll start to see the property start to transform. But there's the property, went through the walkthrough, there's the last bedroom, and you saw the numbers. Do you guys think that there's anything that I chatted about that I'm wrong? Do you think my numbers are wrong? Would you purchase this property today with those same numbers? What do you think? What questions do you have? Put them in the comments for this video series. It's probably going to be 4 or 5 videos in total, but we'll walk through the entire flip, and so you'll know how we did. How do you think we did on this purchase? I'll see you in the next video.